The closing bell has rung, but the business stories continues. I'm Robert Tan, you're watching Business Brief. Let's get started. The Philippines raises first dollar bonds in a year. Investors watch closely. Confidence on the line. $5.7 billion BOP deficit in 2025. Dollar outflows surge despite strong reserves. SILG Remulla pushes back. 10 million peso fugitive reward sparks controversy. Phil-Chinese business leaders call on the Philippines to expand exports, tap Middle East markets now. COA flags 325 million peso Bulacan flood projects, ghost structures and dubious payments exposed. FDA cracks down on Nestlé, dozens of infant and milk products recalled. Chinese sales teams hit hard, U.S. orders dry up, market access shrinks. The timing looks risky, yet the pricing window looks better than before. The Philippines returns to the dollar bond market after a year, testing investor confidence as global markets wobble under a revived U.S.-Europe trade war. The offering is seen as a critical gauge for President Ferdinand Marcos Jr.'s administration. Economic growth slows and the peso weakens amid a recent corruption scandal. A source familiar with the matter says the Philippines offers 5.5-year, 10-year, and 25-year notes. Initial guidance for the shortest term sits around 70 basis points over U.S. Treasuries. And at the same time, yields on investment-grade emerging Asian dollar bonds fall to about 4.5%. That is down from nearly 5.2% when the Philippines last issued dollar debt in January 2025. The surprise is not that dollars leave the country, but that cushion barely flinches. The Philippines ends 2025 with a $5.7 billion balance of payments deficit, signaling heavy dollar outflows even as reserves stay robust. The Bangko Sentral ng Pilipinas reports an $827 million shortfall in December. That December gap drives the full-year deficit. Even so, gross international reserves holds at $110.8 billion. That covers 7.4 months of imports and nearly 4 times short-term external debt. The central bank says the reserves provide ample liquidity, limit currency swings, and buffer the economy from global shocks. The man offering the money is now defending the chase. Interior Secretary John Vic Remulla pushes back against criticism of the 10 million peso reward for businessman Charlie Atong Ang, calling claims that authorities already know Ang's whereabouts unfair. Remulla says he personally authorizes and funds the bounty. He says delaying Ang's arrest would run against his own interests. He reports several law enforcement raids based on intelligence, all unsuccessful. He adds that authorities continue pursuing Ang wherever he may be. Ang is now considered a fugitive. He remains at large despite multiple arrest warrants. The PNP, CIDG seeks an Interpol red notice as authorities keep the 10 million peso reward in place. A deal signed far from Manila could reshape where Philippine exports go next. The Federation of Filipino-Chinese Chamber of Commerce and Industry Incorporated pushes for expanded exports and deeper economic ties with the Middle East. The call follows the Philippines and the United Arab Emirates signing a free trade agreement. Federation President Victor Lim welcomes the Comprehensive Economic Partnership Agreement. He calls it a strategic milestone that strengthens bilateral relations and turns years of engagement into a working trade partnership. He says cooperation in trade, investment, digitalization, and sustainability opens new opportunities for Philippine exports across the Middle East. Flood control is meant to stop losses, but in Bulacan, it is now the source of them. The Commission on Audit flags 4 flood control projects worth over 325 million pesos, citing ghost projects, unauthorized relocations, and payments for structures that are missing or already in place. The fraud audit covers projects by the DPWH Bulacan 1st District, awarded to Wawaw Builders and Darcy and Anna Builders and Trading. The question structures are in Giginto, Hagonoy, Kalumpit, and Malolos City. COA names DPWH officials Henry Alcantara, Bryce Hernandez, Ernesto Galang, JP Mendoza, and Paul Duya, along with contractor representatives Jolo Tayao, Lemuel Roque, Sheena Morales, John Ramos, and Erica Chico. The commission says they may face charges for graft, malversation of public funds, document falsification, and procurement violations. What usually signals a safety failure instead shows compliance at work. The Food and Drug Administration flags dozens of Nestlé's products during inspections in Luzon, Visayas, and Mindanao as part of a voluntary recall of selected infant and milk products. FDA teams find 65 products in Luzon with affected items pulled from shelves, returned to suppliers, or segregated for retrieval, and no continued sale observed. Inspections in the Visayas and Mindanao show most outlets have no affected products on sale, with recall stocks blocked, inventoried, and secured for return. The FDA urges parents and caregivers to check labels and batch numbers, stop using affected products, and report any health concerns immediately. The Philippines may not be in the crosshairs yet. The fallout could still land at home. Economists and business leaders keep a close watch on potential U.S. tariff changes, warning that even without direct targeting, global trade shifts could affect jobs, exports, and investment. The concern is that rerouted trade flows and altered supply chains may reshape economic outcomes beyond the countries facing tariffs. Paolo Bersolon reports.
The Philippines may not be in the direct line of fire of new U.S. tariffs, but economists warn the country is still vulnerable to global trade shocks. This comes as Washington now releases its new tariff offensives, threatening 25% additional tariffs on countries dealing with Iran and 10 to 25% tariffs on European countries until Denmark agrees to sell Greenland to the United States. RCBC Chief Economist Michael Ricafort says the bigger concern is policy uncertainty, particularly if Trump realizes his aggressive trade measures.
The policy making of Trump is very unpredictable. By the time magkakaroon tayo ng bagong policy to address yung new tariffs, magbabago na naman siya ng policy.
Ricafort warns that even if the Philippines is not directly targeted, escalating tensions between major economies could still hurt global growth, and that it will all depend on whether or not Trump will follow through on his promise, or if he will eventually backtrack or reverse in a phenomenon the global press calls as TACO, or Trump always chickens out. Meanwhile, the Philippine Chamber of Commerce and Industry believes the concern shifts to how U.S. trade policy could affect key Philippine export industries. PCCI Vice President for Trade Atong Ang says the country's direct exposure to U.S. tariffs remains limited, and that the Philippines should instead maximize existing trade advantages, including zero tariff access for certain products, such as agricultural exports and semiconductors. To reduce risk, Ang says the Philippines should continue diversifying its export markets and not rely too heavily on the United States, and tap countries where the Philippines already has free trade agreements.
Don't just focus on US. If it's becoming challenging, look at Australia and New Zealand. These are open markets.
But Ang warns that service exports, particularly the BPO industry, could face greater pressure if the U.S. pushes to relocate jobs back home.
To me, the call centers is our biggest export. The export of human capital. Jobs will be affected, high-paying jobs to that, and dollar remittances. But as you see the direction of Trump, he wants to bring back all of the high-paying jobs back to America.
For now, economists and business leaders are on a wait-and-see mindset, as they believe, even without direct tariff hits, global trade uncertainty and policy shifts abroad can still have real and felt consequences for the Philippine economy. Paolo Barcelon, Bilyonaryo News Channel.
We'll be back shortly with more business news. This is Business Brief. ASEAN is setting its energy direction, and the Philippines is positioning itself at the center of regional decision-making. As ASEAN chair in 2026, the country is starting talks that could shape where billions in energy investments flow across Southeast Asia. The Department of Energy will host the ASEAN Special Senior Official Meeting on Energy in Bohol from January 20 to 22. Energy ministers and officials will review ongoing programs and set priorities for regional energy cooperation. Energy Undersecretary Felix William Fuentebella says the Philippines is pushing an agenda focused on energy security, inclusive growth, innovation, and resilience. The discussions will also lay the groundwork for the ASEAN Plan of Action for Energy Cooperation for 2026 to 2030, the region's 5-year blueprint for power grids, renewables, energy efficiency, and oil and gas connectivity. For businesses, these talks offer a clearer signal of ASEAN's energy priorities, helping investors assess risk, align capital, and plan long-term projects across the region. Illegal fishing is costing the Philippines more than fish, as it threatens the country's export markets. Now, the Bureau of Fisheries and Aquatic Resources are rolling out new traceability programs to protect stocks and keep Philippine seafood competitive globally. The programs, running from March to November, are part of a broader push against illegal, unreported, and unregulated fishing, or IUUF. BFAR will develop guidelines for sustainable sourcing, create certification templates, and step up assessment and monitoring of marine resources. BFAR spokesperson Nazario Briguera says the goal is a sustainable IUUF-free supply for domestic and international markets. New policies now require imported fishery products to be fully documented across the supply chain, from ports and warehouses to local distribution. Digital traceability could strengthen market access and consumer confidence. Compliance and system readiness will be key as regulations tighten across the fisheries sector. Wine is making a surprising splash in the Philippines, a market long dominated by beer and spirits. Consumption remains low, yet wine is now the country's fastest-growing alcohol category. Filipinos are starting to sip more, drawn to products designed specifically for local tastes. Christopher Kimbo, president of Novelino, tells Bilyonaryo News Channel's Business 360 that success hinges on making wine sweeter, lower in alcohol, and more approachable. Many Filipinos see wine as mapakla, or too dry, which can turn consumers away. This opens a new growth frontier by adapting flavors, sweetness.
In the Philippines, it's about 0.2 liters per person per year.
Yeah.
In France and Italy, we're talking 40 liters. So it's not so much about, it's really more about getting more Filipinos to drink wine because we believe wine is special.
This opens a new growth frontier by adapting flavors, sweetness, and alcohol levels. Companies are proving wine is no longer just a niche product. A solar company meant to power remote villages is now raising red flags, financial and legal ones. Auditors warn that Congressman Leandro Levisa's Solar Para sa Bayan Corporation faces severe hurdles just 3 years after securing a 25-year congressional franchise. The SGV audit highlights doubts about the firm's ability to stay afloat. Documents show SPBC halted operations across all 7 project sites in 2022, around 3 years after franchise approval in 2019. Leviste confirmed in a January 14 interview that the company has been non-operational for roughly 4 years. He blames regulatory hurdles and says a 2022 law effectively superseded the franchise. Despite this, SPBC's 2024 financial statement shows management has no plans to liquidate and still exploring business opportunities. SGV flags material uncertainty, citing continuing losses, cessation of operations, and a capital shortfall exceeding 470 million pesos. From 2023 to 2024, the company posted losses of nearly 11 million pesos. The case raises questions about franchise oversight, investor protection, and project execution. Lawmakers and regulators now face pressure to ensure public utility franchises deliver on their promises. A major bank is shedding weight but not its reputation. BDO Unibank agrees to sell its controlling stake in Dominion Holdings, signaling a broader push to streamline its group structure. Dominion says its board approved the transaction on January 10. BDO signs a share purchase agreement on January 19. These 1.5 billion shares, about 70% of the company, to Montesur Equity Holdings. The deal is valued at roughly 2.54 billion pesos or 1.68 pesos per share. It is expected to trigger a mandatory tender offer for minority shareholders. Once completed, Dominion will cease to be a BDO subsidiary. The bank says the sale aligns with its strategy to simplify operations after Dominion's conversion into an investment holding company. The deal highlights BDO's focus on core businesses. It also opens the door for a shift in strategy and governance at Dominion under new ownership. Water supply in Bacolod is getting a major boost, but the timing couldn't be more strategic. Bacolod Bulk Water Incorporated, part of Dexter Tubig Pilipinas Holdings, inaugurates its second treatment facility, increasing access for the city's residents. The 1.5 billion peso plant raises daily output to 40 million liters, meeting about 40% of Bacolod's demand, with room to scale to 60 million liters. Combined, BBWI's two plants now serve 750,000 residents. The inauguration drew President Ferdinand Marcos Jr., Congressman Albi Benitez, and foreign diplomats, highlighting the facility's strategic importance. Tubig Pilipinas is continuing its expansion with a 50 MLD project under construction in Talisay City, Cebu, expected to begin operations later this year. Air travel is taking off, but so is trade. Emirates announces 4 additional weekly flights between Dubai and Manila starting April 2, expanding options for passengers and boosting cargo capacity. The new flights depart Dubai every Monday, Wednesday, Thursday, and Saturday, arriving in Manila early the next morning. They join Emirates' existing 28 weekly flights, including circular services to Cebu and Clark. Emirates says the additional flights will increase cargo capacity, supporting trade between Manila, Dubai, and key markets in Europe, the US, and the Indian subcontinent. The expansion follows the Philippines-UAE Comprehensive Economic Partnership Agreement, which promises lower tariffs, greater market access, and more investment opportunities. The flights mean easier movement of goods, more frequent connections, and potential growth in exports and investment between the two countries. The Philippine government says it will honor its investment commitments even after the year's auto budget was vetoed. Car makers and auto parts suppliers welcome the assurance and signal they remain ready to collaborate. Our mobility correspondent G. Baroga reports on how the government plans to maintain support for the auto industry and what this means for investors navigating the sector's uncertainty.
The government says it is standing by its promises to foreign investors even after funding for this year's auto budget was vetoed. Finance Secretary Frederick Go says discussions have so far focused on funding for the Comprehensive Automotive Resurgence Strategy, or CARS program, which totals 4.32 billion pesos.
The government finalized a funding solution for the CARS program, and therefore car manufacturers enrolled in the program can now be assured that government will fulfill its commitment to investors.
In a joint statement, the DBM, DTI, and DOF made it clear the government is not turning its back on the auto industry. This comes after car makers and auto parts manufacturers raised concerns. But the agencies say the government can still pay its validated obligations using verified savings from last year, mainly from the DPWH. In short, the government says it has enough to cover payments to companies like Toyota and Mitsubishi, along with qualified auto parts makers under the CARS program. For companies that don't yet have issued tax payment certificates, the departments say these may still be taken up under the 2027 National Expenditure Program. Secretary Go adds that President Marcos's message is clear. Commitments to investors must be honored, and the CARS program remains central to strengthening local manufacturing. The auto and auto parts industries welcome the move, saying they are ready to work with the government to further grow the sector. The Chamber of Automotive Manufacturers of the Philippines says the decision restores confidence and helps put the industry back on track. Toyota Motor Philippines also welcomed the development, saying it boosts confidence in the country as a hub for car manufacturing. Meanwhile, Philippine Parts Makers Association President Ferdy Raquel Santos is calling for the rollout of the CARS follow-up program known as RACE, or Revitalizing the Automotive Industry for Competitiveness Enhancement. He says the amount needed is relatively small, but the payoff could be big, especially for local parts makers. The group is also looking ahead to the Electric Vehicle Incentive Strategy Program, where auto parts manufacturers are expected to play a major role in building the local EV supply chain. For BNC Mobility, G. Baroga.
We'll be right back. Ahead, a snapshot of today's markets. This is Business Brief. Asian shares are mostly lower Tuesday after U.S. markets were closed for Martin Luther King Jr. Day, a national holiday. The JSX Composite, HNX 30, KSE 100, and Thailand Set IDX trade higher, while the S&P, ASX, All Ordinaries, FTSE, Bursa, Malaysia KLCI, Hang Seng, Nikkei 225, Shanghai Composite, and BSE Sensex are down. On currencies, the US dollar trades at 158.59 against the yen, 779 versus the Hong Kong dollar, 128 against the Singapore dollar, 1479 against the South Korean won, and 3112 against the Thai baht. The Australian dollar trades 67 cents against the greenback. On commodities, both gold and oil prices rise, and on crypto, Bitcoin drops over 2% and Ethereum falls nearly 3%. Inflation may look tame on paper, but rising food prices are still straining Filipino households. Today, we'll break down what's driving costs, why it matters for your budget, and practical ways to manage spending. And joining us today is HSBC economist Aris Dakanay, who will explain the forces behind inflation, how it impacts everyday purchases, and what to expect in the months ahead. Good afternoon, Aris. Welcome to Business Brief. Thank you for joining us.
Good afternoon, Sir Robert, and Happy New Year.
Happy New Year. Now, Aris, December inflation was mainly driven by food. Now, can you explain in simple terms how one category can push up overall inflation and why this matters for the prices we pay every day?
So I think it's very important to note that for the Philippines, we are a developing country. And with a developing country, we tend to spend a larger portion of our budget in spending food. And to be exact, around 37% of our budget is spent on food and beverages. So if food prices go up, if beverage prices go up, it tends to really deteriorate the purchasing power of everyday Filipinos.
Now, if food is the main driver, does that mean overall inflation numbers can be misleading for ordinary households? Now, how should families interpret inflation reports like this one from the BSP?
I wouldn't say that it's misleading, but we have to understand that it is a general average. It takes into consideration the spending patterns of not just your high-income Filipinos or for your low-income Filipinos, but for everyday, for all households in the Philippines. Now, again, that considering that it is an average, we also need to take into consideration the fact that food CPI has a regressive factor into it. The lower income households in the Philippines tend to spend a much larger portion of their budget on food. So when food prices go up, it has a regressive effect it is able to curtail the consumption of lower income Filipinos much more than higher income households.
Now, Aris, food is a non-negotiable expense in the household. Now, why does inflation in essential items hit households harder than other costs, and how does this affect daily budgeting?
Well, it's mainly because, as mentioned, it's an essential item. If no matter how hard times are, we need to be able to feed our family. We need to be able to spend money to celebrate Christmas, to celebrate New Year's. It is a very important factor for everyday Filipinos, regardless of where you're from. And as mentioned a while ago, it hurts much more whenever whenever food prices, it hurts much more for lower income Filipinos. Now, if I can show a very interesting number, did you know that wages in the Philippines grew by around 7.4% on average in 2025, while inflation in 2025 only grew on average by 1.7%. So the purchasing power of Filipinos grew by 5%. That is huge, mainly because rice prices, which is 10% of a household budget, went down by a lot.
Now,
So inflation is a powerful tool.
Now, Aris, you mentioned in the report weather-related supply disruptions. Now, can you explain how things like typhoons affect prices and why that risk might show up in our grocery bills before it appears in official inflation data?
So for the Philippines in particular, we don't usually import our food as quickly. We import it on an as-needed basis. Now, here's the risk. If a typhoon does hit the Philippines, most especially on the where we grow a good portion of our vegetables, if a typhoon hits that particular region, vegetable prices will have to go up because supply is disrupted. And given the fact that it takes time for us to be able to import food abroad, that supply disruption will really cause inflation to go up. And for vegetable prices in particular for the month of December, because we had 2 super typhoons sometime in November, vegetable prices went up by 10%. So a lot of a lot of our budgets, to be able to recuperate that loss, that higher vegetable prices, we spend more on, let's say, simple carbohydrates, spend more on rice. We even spend more on meat, mainly because vegetable prices are more expensive.
Now, Aris, during these hard times, governments do try price freezes, but can you explain why controls sometimes fail? And what financial lessons can families take from this, like when you stock up or save?
So this is a lesson that I think we learned 2 years ago when we decided to put a price freeze on rice. But it wasn't really that effective in curbing the surge in rice prices, mainly because it's very hard to track. It's very hard to implement a price freeze. If you're a farmer of rice and you were told that the government would put a cap on the products that you sell, it's gonna hit hard on your income. So you tend to find ways to be able to sell at a higher price to make sure your income is well protected. So I have to say, it's hard to implement. It comes at a cost, and it comes at a cost for the incomes of rice farmers.
Now, when we look at corruption investigations that are happening now, which are slowing government spending, how does this connect to growth, jobs, wages, and ultimately the money people take home? Can you explain this chain in simple financial terms?
So I mentioned a while ago that the purchasing power of Filipinos grew by 5%. But Sir Robert, case in point, consumption is growing at its slowest pace since the global financial crisis, barring the COVID-19 pandemic, even when the purchasing power of Filipinos grew. And I think it's because of the uncertainty brought by the extensive corruption investigations that is currently ongoing, which is mainly focused on public infrastructure projects. A big portion of this does fuel our growth. And I guess we need to take into consideration that 10% of our labor force is in construction. So with budget cuts seeing in DPWH and DOTR, when confidence in public infrastructure and private infrastructure is down, if you're 1/10, if you're part of that 1/10 of the labor force, you're kind of like uncertain of whether you'll have maybe perhaps a lower income moving forward, whether you'll be laid off. there's a lot of uncertainty towards your future in the labor market as a construction worker. So when your job is a bit more uncertain, I wouldn't say there will be a loss of jobs, but I'm sure there are concerns of uncertainty. You tend to save more because you don't know what's ahead in the future. So with the saving rate in the Philippines for all households actually increasing higher than pre-pandemic levels, consumption is down even when the purchasing power of Filipinos are growing.
Now, if we look at fiscal policy, if it slows, the BSP may have to act. Now, can you explain how interest rates work in this context and why rate cuts might help the economy but not necessarily the average family immediately?
So what the BSP does, or at least the monetary transmission, is that when demand is low, it helps prop up demand by lowering interest rates and making it less costly for investors to take out credit and invest. And that would basically kickstart a domino effect of further demand in the economy. So that's what's happening today. We have, let's say, fiscal spending a little weighing down on growth. So monetary policy would need to pick up the slack, cut interest rates, make it more affordable to borrow money and invest in maybe your SME, your sari-sari store, your startup, and be able to kickstart growth in the Philippines. Now here's the thing. Though the monetary transmission rate in the Philippines is still pretty low. Retail rates in the Philippines have only gone down by around 40 basis points, even when the BSP has already cut by 200 basis points. So I think for monetary policymakers, it's very important to discuss what other macroprudential measures should be in the playbook to make sure that your everyday Filipinos feel the rate cuts that have already happened.
Now, Aris, we're expecting rate cuts this year. Now, for households with loans or savings, who benefits and who might see little effect? Now, how should families think about borrowing or saving in this environment?
So if you do expect rate cuts to happen anytime further, and for us, for BSP, we do think there's one more in the pipeline. If you're an investor or someone who plans to borrow in the next, let's say, few months, we tend to not borrow today because we will wait for those rate cuts to happen so that we could avail of a lower interest rate. So investment tends to have a lag. If you know that rates are going down in, let's say, 2 months, you won't spend today, but you will spend in the next 2 months when those rate cuts do happen. So there is a lagged effect. And for everyday Filipinos, I guess, if you do already have a mortgage in place, a rate cut would lower your interest costs and will help you basically, a little bit of your budget in spending on consumption rather than spending on your loan.
Now, when we look at rate cuts also, and you mentioned people will tend to wait for that rate cuts. Now, we're also looking that the peso is expected to weaken. Can you explain how currency fluctuations can affect prices of goods, especially imported food, and what families can do to plan their spending and also maybe taking out loans or investing?
So I would actually say that at 59.5, it is not inflationary. I would even say that it's pretty healthy for the Philippine economy. It actually empowers the purchasing power of Filipino households who have an OFW abroad, such as myself. So if you have, let's say, so I would say 8% of households in the Philippines have an OFW abroad. When the peso depreciates, every dollar that person sends to the Philippines becomes more valuable and increases the purchasing power of that household in the Philippines. So I would say when the peso depreciates, it increases the power of the consumer. Now, I guess there's a decision that needs to be made. If your currency depreciates, the goods that you import become more expensive. So it actually becomes an incentive for a household to buy locally made goods. Because of the peso depreciating, imports are now more expensive. So I would say it drives domestic demand, it drives domestic supply chains, and it helps domestic producers.
But some would argue that it's good for the OFWs, but for those who are working here and earning in pesos, it's quite different.
So if you're earning in pesos, let's just say put the BPO sector as an example. The BPO sector is one of the biggest employers in the Philippines. When the peso depreciates, a foreigner it will make it cheaper for the foreigner to avail of Filipino services. If there are more foreigners availing of Philippine services, that would entail more jobs, that would even entail more income, etc., etc. So let's compare the Philippines and our number one competitor in the BPO sector, India. India's currency has depreciated by around 9%, while for the Philippine peso, year to date, since 2023, it was around 5%. So in currency alone, Indian services is now 4 percentage points cheaper than the Philippines, 4% cheaper than the Philippines. But look at the impact of it when it comes to growth. The BPO sector in India is already growing by around 15 to 20%, while for the Philippines, it's only growing between 2 to 8%. The Philippines is losing market share to India. So if we're not open-minded to a weaker peso, I would have to say our BPO sector will lose market share, and that will be at the cost of future jobs.
Again, looking outside again, geopolitics, regional supply, and global rates are risks. Can you explain how events abroad end up affecting our local prices and why being financially literate about global news matters for everyday budgeting?
So I would have to say, for being updated in news, reading the news every day, we will soon realize that what is happening, let's say, in Venezuela, it won't have a big impact in the Philippines. So let's put some numbers into it. Oil prices kind of went up a bit. There was a knee-jerk reaction. Gold prices went up because people thought that there will be inflation, or at least lower inflation, when the U.S. Did what it had to do in Venezuela, because Venezuela has the largest portion of oil reserves in the world. But if we dig a little bit of research, if we read the news every day, we'll soon realize that only 10% of the reserves of Venezuela is actually commercially viable. So it didn't really make an effect in markets. Financial prices went normal again. It was just a knee-jerk reaction, and there is really nothing to worry about.
Now, Aris, on a practical level, what simple strategies can families use to protect their budgets from volatile food prices, like tracking spending, prioritizing essentials, or building small savings buffers?
I do have to say, when things are uncertain in the future, it's a very good habit to save. And that is what I think what a lot of Filipinos are doing right now, with growth slipping, with fiscal spending a little bit more uncertain than before, with a lot of the geopolitics going around. Again, the saving rate of the Filipinos have increased higher than pre-pandemic levels. This is, I think, a good financial decision when times are uncertain, so that when risks do materialize, if it does materialize, we do have the savings and the income to put aside to weigh through the challenges ahead.
That's good to note. Now, Aris, finally, if you were to advise policymakers today, what concrete economic measures would help stabilize prices for food and essentials, and how should everyday Filipinos understand and respond to these kinds of policies?
It's really propping up confidence in the economy. So after the corruption allegations, we have to say business sentiment index has fallen to its lowest since 2010. Again, barring the COVID-19 pandemic, consumer confidence has also fallen. So we do really appreciate, it was a big deal that government officials, I think yesterday, met with the businessmen, the business community in the Philippines, to basically say that, hey, we kind of stumbled a bit, but because of this, we're going to use this opportunity to push through with bold reforms.
Okay, Aris, thank you for your insight. Thank you for joining us this afternoon. We learned a lot about how to protect our money, and hopefully those watching will be able to learn a lot of the what we need to learn about the economy. Thank you.
Thank you, Sir Robert.
We're taking a short break. We continue with more business news. This is Business Brief. Philippine stocks are climbing even as investors brace for potential turbulence. The Investment and Capital Corporation of the Philippines says the PSEI could reach 7,000 this year. Analysts point to falling interest rates, regulatory reforms, and a steadier economic backdrop as key drivers. ICCP President Jesus Mariano Ocampo calls recent gains a catch-up phase compared with regional markets. He notes that easing rates should boost consumption and spending, fueling further market momentum. Ocampo cautions that near-term volatility could emerge as listed companies report weaker earnings. Last year's slowdown, driven by corruption-related issues and other disruptions, may still cast a shadow. He adds that manageable inflation and lower energy costs from new renewable projects could help sustain the market's upward trend. The outlook is promising but conditional. Stability in global markets and consistent policy will be crucial if the PSEI is to reach that 7,000 milestone. When most chains slow down after global turbulence, Hotel 101 Global is doubling down, breaking ground in Melbourne with a 766-room property. The Hotel 101 Melbourne project in the heart of the city's central business district is slated for completion in 2029. Analysts forecast $323.6 million in sales revenue. The property will follow the chain's standardized global model, offering four-star amenities at mid-market prices, including meeting spaces, a conference center, a swimming pool, a gym, and a rooftop bar. The company's asset-light, tech-driven strategy monetizes developments through unit pre-sales and recurring hotel operations. The move underscores its aggressive international rollout while listed on Nasdaq. China hit record exports in 2025, but the win comes with a human cost. Shipping goods globally soared, yet salespeople say shifting away from U.S. orders has been the toughest period of their careers. Tariff hikes by U.S. President Donald Trump slashed orders by a third. Chinese firms diversified to markets like South America, often chasing smaller, lower-margin orders. Frontline salespeople report longer hours, lower commissions, and higher pressure. Experts say success requires firms to offer longer payment terms and absorb higher default risks. Profits at industrial firms fall 13.1% in November, the fastest decline in over a year, showing the challenge behind record export figures. China's export strategy proves that record shipments don't guarantee profits, and it's frontline workers who feel the heaviest impact. The global travel sector gets new leadership as Gloria Guevara returns as president and CEO of the World Travel and Tourism Council. She previously held the role from 2017 to 2021. Her appointment was approved by the organization's operating committee. The move comes as the industry looks to boost investment, create jobs, and strengthen global advocacy. Guevara previously served as Mexico's tourism secretary. She says her priority will be to unlock growth and investment, deepen member engagement, and ensure the Council continues to provide world-class research and advocacy. Her return signals a push for stronger global representation and strategic initiatives to support job creation and recovery in the travel sector. Locally, this could mean greater opportunities to attract foreign tourists and investment, supporting local jobs and tourism growth. Philippine shares dropped for the third straight trading day. The PSEI closes over 1% lower to 63.52. Majority of the sectoral indices are in the red, with property falling the most at nearly 3%. Decliners outpace advancers 133 to 68, with value turnover at 7.1 billion pesos. Majority of the day's most active stocks are in the red, with Bloomberg falling the most at over 5%. In currencies, the peso closes at nearly 59.46 against the US dollar, down from previous close of 59.44. Stay with us for more business news. This is Business Brief. After a year-long rally that lifted emerging market currencies, JP Morgan is now warning investors they may have gotten too enthusiastic. The bank cuts its outlook on emerging market currencies to market weight from overweight, pointing to short-term positioning that has become overbought. JP Morgan also lowers its view on the South African rand, and it recently trims risk exposure in Central and Eastern Europe, as well as the Mexican peso. According to the bank, a surge of investor inflows into emerging market assets has pushed its FX risk appetite index above the threshold that triggers a sell signal. Analysts caution that a cluster of global uncertainties, from Venezuela and Iran to shifting U.S. policy and tensions in Greenland, could stir short-term volatility in emerging market currencies. The richest people on the planet are far more likely to hold power than the rest of us. Oxfam reports that 74 of the world's 2,027 billionaires held government positions in 2023, giving them a 3.6% chance of office, while the average global citizen has less than 1 in 100,000. Oxfam America says this highlights the link between political and economic inequality. The years 2020 to 2025 were lucrative for the super rich, with wealth reaching a record $18.3 trillion, growing 3 times faster than the past 5-year average. Oxfam calls for stronger workers' rights, higher wages, breaking up monopolies, and curbing the political influence of billionaires through taxes and campaign finance reforms. The report is a stark reminder economic and political power remain highly concentrated, and addressing inequality requires both policy change and greater civic engagement. Even in a city frozen in time, Pompeii still has secrets to reveal. New imaging technology uncovers nearly 80 previously unseen inscriptions, ranging from love notes and gladiatorial scenes to everyday messages. Researchers use reflectance transformation imaging to expose faint scratches on plaster along a long corridor connecting Pompeii's theaters to Via Stabiana. These discoveries add to the city's 10,000 known inscriptions, offering a richer glimpse into the daily lives and emotions of ancient Romans. Archaeologists plan to combine 3D photogrammetry and RTI data into an interactive platform, allowing full visualization and study of the graffiti. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again tomorrow for the stories that help you plan your next big, bold business moves. Only here on BNC, the Bilyonaryo News Channel.